It is my pleasure to welcome everyone to the Directed IRA webinar and also a special podcast episode of the Directed IRA podcast. I'm Mat Sorensen here with Aaron Halderman, the great and powerful. And we're excited for today's topic. We knew we needed to talk more about the investment assets people can buy with self-directed IRAs and 401ks. You'd have lots of questions about it. And one of the most popular things to invest in with a self-directed IRA has been a short-term rental, right? We've all used Airbnb as a user, likely, or VRBO or any of these other apps out there. Many of you are already doing these possibly outside of your retirement account. Some of you probably have them already in your retirement account. But Jay is an expert in this field. He's learned a lot. He's done it himself, He teaches other people. He's been a client of ours for years in the law firm. And so I just wanted to kind of pick his brain. And I appreciate you, Jay, for agreeing.
Yeah. Okay. Let's hope there's something there, but let's go for it. But I'm ready. So that it's clear. I've got my board. I'm just ready because I don't know what you're going to throw at me. I can pull up calculators, websites, and do whatever I need to do.
Okay. I love it. So, all right, what we're going to do here is, this is recorded, everyone. So if you miss any piece of this, don't worry, it's going to be recorded. We'll post it up on the Directed IRA website under the webinars. And then it's also going to go up on the podcast, just the audio episode. But, if you want to see the good looking Aaron and Jay Massey, you got to get to the webinar page at directedira.com. So
that's funny.
And then, Aaron, do you want to go over any housekeeping stuff in terms of Q&A or how you want to run it?
Yeah, this will be great. So here's the format we'd like to do. We'll kind of pause throughout to do some live open Q&A. So just put your questions there. We'll get through as many as we can during our time together. Do have an announcement. If you haven't already registered for the upcoming Self-Directed IRA Summit, please do that. That's at sdrasummit.com. It's October 21st and 22nd in Scottsdale, Arizona, with the special charity golf tournament. That's optional, but we'd love to have you. That'll be on Saturday, the 23rd. So come on out to that. Again, sdrasummit.com. We have some early bird pricing up for that and a VIP option. And you can, have a VIP dinner with me, Matt, and Mark, if that tickles your fancy. And then in this webinar, let me hit on the things that we'll discuss. A lot of you obviously registered, you saw some of the bullet points, but let me just hit this at a high level because we don't have a ton of slides that we're going to share. We're just going to keep this interactive, especially since most of it will be on audio. So we're going to cover finding short-term rentals, what properties are good for short-term rentals, what markets are best for them, Airbnb and Vrbo tips, self-directed solo case structures for your short-term rental, and then avoiding or reducing UBIT or UDFI. So those will be some of the things that we want to hit on and cover. Just a quick disclaimer, all this information is for educational purposes. You need to do your own due diligence. This doesn't constitute as any investment or financial advice. So, take it for what it's worth. And again, educational in nature. And we're pleased to have our special guest expert, Jay Massey, full-time real estate investor, entrepreneur extraordinaire.
That's definitely what I've been called before. I tend to think of it more I care more about cash flow than I care about any one particular asset class. It just so happens that right now, short-term rentals, of all the things I've ever done, they're the easiest access to cash flow for the person with the least amount of skill set. And you cannot beat the internal rates of returns that we've been able to help people generate. And of all of the strategies that I've had the privilege of doing and teaching, this one has created more seven-figure people than anything else I've done. So I'm kind of stuck.
I'm interested in this. And so I'm actually looking into this myself. I have a current property that's a long-term rental. Just give you that I'm thinking about turning into a short-term rental. And so I figure, why not kill two birds with one stone? I get Jay's advice, and we'll call it a Directed IRA webinar.
I make you this promise. By the time we're done, you won't be thinking about turning it into a short-term rental anymore. You'll be in the process of turning it into a.
Okay, that's what I like. So let me give a little bit more background on Jay. Aaron was giving his little intro there. But he's got a podcast, CashFlow Diary, website, cashflowdiary.com. But Jay, I want to kind of springboard this. I know, Jay, because you were buying multifamily apartments, right? You were buying commercial and multifamily apartments
Yes.
5-10 years ago, and now you're like short-term rentals. Why?
What happened? Yeah. So in that process, we got up to around 400 doors or so. That was the multifamily apartments. That was the, what was it called? Commercial retail. There was also some cell phone towers, as well as single family homes, notes, and a whole bunch of things. What I noticed is that in the portfolio management piece, the longer or bigger the portfolio got, there became this trade-off between deferred maintenance and cash flow. And it was a very frustrating experience to have a significant amount of responsibility, but feel like I could not comfortably enjoy all of the benefits. And I noticed that as real estate investors, we can spend an inordinate amount of time focused on the expense side of the equation, but very little focused on the income side of the equation. We literally just accept that what I'm going to do is I'm going to sell 365 days of time to one party and accept a 30-day, an every 30-day financing plan. That's what we accept by default. We don't think about what else could I do? How could I package the time differently? Or what other additional services could I add? And we don't do that because we start at the property, not at the person. And once I began to start at the person, it began to change everything in how I looked at real estate, because I was involved in a hotel deal over in the country of Belize, and it began to open my eyes to, wait a minute, this is still that same tenant, but they're coming and using real estate for a different purpose for a smaller defined amount of time. And when I began to look at the economics behind that, I was like, wait, this is because people, when they're using temporary housing, they're purchasing with a different portion of their wallet. It's not the same. There are different allowances that are given when we're using temporary housing. So, and we're not buying with the same part of our wallet, so to speak. And we think about it differently. Plus, so it created an like a doubling in, revenue when I didn't even understand what I was doing. And since then, we've been able to develop more things behind it to be able to take net operating incomes, to speak apartment language for a moment. And I tell apartment people, imagine being able to double your NOI while only with a net increase of running expenses of maybe 10%. And it's kind of just crazy because you're able to maintain your property, you're able to have more net cash flow, and at the same time increase, because the apartments are valued on income.
Yeah.
You do a lot for, depending on the cap rate and where the property is. So it's the math. The math just tells me what to do.
So basically, at the end of the day, the math, you realize you could make more money. People are willing to pay more. You could generate more money out of the same property by thinking of the customer differently, or the person using it, I guess. But what are you?
But there's one more piece though, because see, you got the long term, and all my long term people understand how many carry forwards do they end up with. You've got carry forwards for years, right? And you can never, you're like, how can I soak those up, or what can I do to be able to begin to offset those in the year? And you're like, how can I do that? The downside, here's the downside to short-term rentals is the amount of taxable income that they generate. It is, if you do not have, I'm gonna say this clearly, if you do not have competent tax professionals, not people who can just complete the documents, but people who can also, what is it called? Strategize.
Yeah.
You're in trouble.
Well, we can help, of course, the law firm KKOS Lawyers, but for those of using an IRA, Jay, and I know the self-directed IRA and 401k strategy.
My favorite funding strategy.
Yeah. So a lot of people want to just buy a short-term rental with an IRA. They just want cash flow, right? I just want to make more money than I can than a mutual fund. Yes. So, or than a long-term rental, or maybe my IRA has a long-term rental already. I might want to turn into a short-term rental.
Okay.
But I want to talk about, to maybe tell people how a short-term rental works.
Yeah.
Income, what's a little different on it. Then we can get into like properties and markets and other stuff, but I don't want to assume everybody knows how the short-term rental works.
Yeah, that's a good starting point. So here's what I would say. If you are familiar with a vending machine, you're familiar with the short-term rental. I take the vending machine example. I use that to help people understand it's almost the same business, because you can go to Costco today. If you can go to Costco today and get, say, 24 cans of soda for, I don't know, what, $6. So you take that 24 cans and you've got your $6 here. But when you go to the actual vending machine for one can, isn't it about $2? Something like that, right? And short-term rentals are the exact same thing. We are the short-term rentals is the retail component. A landlord is the wholesale component, because what a landlord typically does, and the inventory is time. So you buy 365 days at a set price. And for the sake of this example, let's call that $24,000 for those 365 days. Well, what we do is we break down that same 365 days and we'll sell one day at a time for $145. That's really, it's the same thing, but we just break apart the packaging of what's being purchased in bulk. And that's it. Everything else is done in service of, well, if I'm only going to stay there one day, how do I make it as comfortable as possible? Just like the vending machine. If I'm only going to only take one can, what do I need to do? I need to make it cold. I need to make it accessible, AKA convenient, right? And I've got it, and then obviously I need it in the packaging that I want in one can. So it's got to be in the right spot. It's got to have some electricity going to it. And you've got the machine to deliver it. So it's got the mechanisms and the components, but that's what you add to this, but it's the same can that you could have bought at Costco. So in essence, it is the same shell of a place, but now we're adding furnitures, fixtures, and equipment basically into the same space. And all of this is determined by who do you want to serve. This is a mistake most people are making right here, is that they're not thinking about who do you want to serve first. They're letting their property drive the decision. They're letting the marketplace drive the decision, when that's the issue. But in essence, all I'm doing is repackaging time that I purchase from landlords. So I'll purchase. Does that make sense?
Yeah, love it. Love it. Jay's such a good teacher. Tell me though, what is the differences we're seeing in that pricing? Like between, and I know markets are different, properties different, what you're trying to provide the customers different, but like, I mean, if we want to be selling at vending machine prices, our property essentially, how different is that from someone that might have something they could just rent, month to month, a long-term rental?
Got it.
What is the difference?
Here's what I will say.
I don't know how far off it is.
It's very far. You're going to see. I'll show you real numbers here. So what it comes down to, first of all, I want to make sure that everyone understands this. When I say this, I am accessing data from 17 different countries. So I've had the privilege of working in 17 different countries. So inside the US, outside of the US, multiple currencies, nearly every state within the US, metropolitan areas, the middle of nowhere, Ozarks, as well as Canada and everywhere in between, multiple languages, multiple jurisdictions, ordinances, all this stuff. And the numbers I'm about to share with you are across the board. Okay, so outside of that, here's what I mean. In general, when we're first starting, meaning your experience is the lowest, I tell people to expect double market rent. That's your gross revenue. Your first 12 months, double market rent, period. That's where we start. Then it's going to be a 30% net profit margin. These are minimums, by the way. Everything I'm talking right now are minimums. A 30% net profit margin, that's annualized, meaning I'm accounting for seasonality at some places. For those of you in Tucson, in the summer, you wish you could turn the sun off. Those of you in North Dakota, you understand what I mean, how weather in the winter is like where animals freeze. This is a problem. So pricing is different.
Jay, I just want to know, Jay's a pro. he decided to make fun of Tucson, not Phoenix, where we live. Make fun of Tucson. That was a smart move.
No problem. I was being a little strategic with that. Yes.
Yeah. Jay's in Southern California. Well, I guess it's seasonal there a little bit. I guess every place is a little.
Well,
seasonal.
we have a different issue, and it's not so much the seasons as much as it is we'll call them natural disasters. We have fire, flood, earthquake, and mudslide season. So those are things that we have to deal with because so few people have exposure to them. It affects travel to California, to and from California. But when it comes to the numbers, double market rent, 30% net profit, or a more real way I like to say it is think of it as $800 per month per bedroom. $800 per month per bedroom. So in a 1-bedroom unit, net income should be around $800 per month. In a 2-bedroom, $1,600, 3-bedroom, $2,400, which makes it really, really easy to do long-term rental versus short-term rental comparisons. Because if you have a 2-bedroom, 1-bath house, and you are not currently netting a minimum of $1,600 on a monthly basis, not annual, monthly basis, what I am telling you is that as a short-term rental, the minimum you should expect is around that $1,600 on a monthly basis.
Now, let me ask a question, just because this is a little different on short-term rentals. And Aaron, if you want to pull any questions from the audience, I don't want to, take all the questions of everybody. Don't
worry. It's all good. This happens every time I start talking.
Okay.
Every time. Mm-hmm.
Is there a higher vacancy rate where you have less days being used in an Airbnb? And again, this is me. I'm like on the outside looking in. I was bowling with a friend. We're actually bowling, and she had an Airbnb, and I was just grilling her with questions. And she had owned this Airbnb for almost 2 years, and she's like, "I have had 99%. It is booked." She's like, "Literally, I can count the days where it was not booked on my hand." Is that normal? How is it? I just assumed on the outside looking in that maybe, half the time you had it booked, you were good, maybe 2/3.
Got it. So first of all, I'm just refer your friend to me, because number one, anytime your occupancy is north of 92% on an annualized basis, you're likely leaving money on the table. The number two mistake I see existing real estate investors make is just because, say, maybe they get a little bit more or even double their net, what they're used to, they think, oh, this is great. Well, you're still technically underselling that property drastically, but below what you could get. So the first thing that when someone says that, oh, man, all year I can count vacancy on one hand, I'm like, uh-oh, you sold it too cheap and you don't even know it. And that's number one.
I was waiting. I mean, I was very impressed. I didn't, next time I see her, I'll burst her bubble. But
but no, what you're saying is true, but my numbers are actually inclusive of vacancy. So even though vacancy, yes, will be higher, it should be no higher than 92%. I tell everyone to aim for 85, but do your math. Well, sorry, aim for anywhere between 82 to 92% is around on an annualized basis where you should be. If you are below 82%, I can guarantee you're doing something wrong. I don't know what, because, and I got to correct one thing. While we're talking today, these are not Airbnbs. Airbnb is a marketplace.
Okay.
And you can't do Airbnb because it's a marketplace, not a verb. These are temporary housing, do short-term rentals, because by calling them an Airbnb, you are limiting the scope of what is actually the business, because we've identified over 65 different use cases for temporary housing and short-term rentals. And it is because of this identification, seeing how individuals use temporary housing, that we've been able to achieve a lot of the things that we can achieve. And this is why, regardless of ordinances, we're able to help individuals in every jurisdiction and in so many countries, is because the need for temporary housing outstrips the supply. It did that pre-COVID, it's doing it now. So that's part of the reason why what you're experiencing, many of you, if you might be doing well, just don't let that confuse yourself thinking you know exactly what you're doing, because until you can launch your short-term rentals in multiple cities and have very similar results, then it's really, really hard to do. For example, last month on the 19th, we opened or signed at least for 3. By the 22nd, we had all 3 of them occupied for 30 days or more. By the 26th, when the first person arrived, we had enough revenue that paid for all of the setup for those 3. And it's simply because the demand is way higher than supply, but you got to also know how to target for the person that you're looking to serve. You can't just you can just throw anything up there, but now you're guessing, and that's good, but you won't get the same numbers that I'm quoting. And as you get more specific, the rates go way up. Yeah. Way up.
So let me take a step back, because I think Jay, you can like dial this in, like, you know, Jay's like going, I'm asking him a question, he's like dialing it into like a specific percentage and pricing and everything. Let's say I'm brand new, okay?
Yes, let's.
And I know Airbnb at least because I've used it.
Mm-hmm.
Like good. What? But Jay, you might have all these other ways of how you're going to this short-term housing. Let's just not think Airbnb.
Right.
But what should someone brand new be doing? Like, I don't want to spend a ton of time on it. I like owning real estate. I like the income, but I don't want a freaking job. Right. So how do I find these short-term opportunities if it's not a website, Airbnb, or other things? What else am I doing?
Yeah, totally understood. I think I understand. So first of all, let's draw this distinction, because this happens all the time. You can have a real estate business, that's great, but you also have a hospitality company. They're 2 completely different things. So it's very similar to how Hilton and Marriott, et cetera, operate. If you've ever stayed at a Hilton or a hotel, et cetera, Hilton likely doesn't own that building. They have a management contract, typically a long-term one, 10, 20, 30 year situation for that particular location is what happens. And then they have a landlord, and then that landlord or the person who owns the building may or may not own the land. That's just depends on jurisdiction, but that's how that goes. So understand, we're talking that exact same model. If you want to look it up later, it's called an asset light model, right? So that's the first thing to understand. When it comes to finding the locations and not wanting a job in this, that, and the other, what I want to tell you is that as a hospitality company, this business is hardest between 0 to 7 units. You will work your hardest between 0 to 7 units. It does not get any easier until you get around 7 to 15 units, because now you have enough revenue to hire what we call a customer experience team. After 15 units, this is where, if you've ever heard me say how you can work 1 hour a day, this is that's like holy grail, very nice, because you've got a lot of the right infrastructure. And the good thing about that infrastructure is that it'll take you up to 120 units. So between 15 to 20, between 15 and 20, you've spent all of your operational costs. So the same operational costs you have at 15, you can drive that much more revenue through with 120, which is the super operational leverage that you can get inside this business. Yet another reason why I love it. But to answer your question very directly, where inside of a city is directly proportional to who am I serving. This is why who I'm serving matters. For example, if I said I wanted to serve people who are in the medical profession that travel, so this is your travel nurses, this is your doctors, this is also if I was wanting to serve people at training hospitals, I would want to find, but because I've identified that first, I'd want to be near the hospital.
Yeah, I have even by the hospital. I mean, I have a client does short-term rentals, all up by, what's the big hospital here?
St. Luke's?
No.
Phoenix Children's?
No, the big one that's like the
Creighton?
No, the like really famous one. Anyways, there's a client but there's a bunch of, it's a hospital people come from all over the country.
Oh, yeah. Mayo Clinic.
Mayo Clinic. Jeez, there it is. Okay, Mayo Clinic.
Yes,
okay.
that one.
That one.
Okay,
all right.
Exactly.
All right,
yeah.
But that he owns a bunch of short-term rentals just around the hospital. And it's actually not the medical, it's the families of people being treated.
That's what I was getting to. Yes.
That's who he's always renting to.
100%. In fact, if you are near a Ronald McDonald House right now, call them. They have a waiting list nearly everywhere because the families cannot stay. If you are, my favorite types of hospitals for this business model are the children's hospitals, because everybody comes to visit the kids when they're sick, but not everybody comes to visit grandma. And that's just the way that is. So those are the things that go through my head. So when it's with the hospital, I want to be within 2 miles if I'm looking for the workers, or within 10 miles if I'm talking about the family. So I'm looking for residential areas within the 2 to 10 mile range of the hospital. By the way, here's a quick hack for some of you. There's another reason I like to be near hospitals. It's the emergency shelter play. And in those cases, I want to be on the same block, because when there's an emergency, say, and power goes out, hospitals have redundant electricity. And if I can be on the same block, I'm likely going to be on the same grid as the hospital. And then when a hurricane, flood, et cetera, happened, my short-term rentals can be the only ones with electricity in the area. And if you really want to see what happens for pricing and what you earn, that's a whole different ballgame at that point.
Okay.
Nice. I love it. So who are you serving?
Yeah, you have to start there. Until you have that, it's hard to know everything is determined by who you're serving. So here's another popular one that I like. So the military. If you're near a military base that's training, a military base that's not training, it just really doesn't matter. There's PCSing, meaning permanent change of station. And when that happens, the entire family's got to move. And oftentimes they don't know if they have base housing or where they're going to be able to stay off base yet. And they need a temporary place to stay. But also, if you're near training installations, those training events happen on a very predictable cycle. And the military always has a need to house individuals either visiting the base or coming to and fro. You've got a lot. And if you're in the DC area, I don't even think I need to really say that, but you understand. So you've got a lot of use there. Plus, they pay on the typical GSA schedule. And if you decide to do some quote unquote extra things like small bits of food, not only can you get per diem for lodging, but you can also get per diem for food, which then allows you to put yourself in a category to where your daily rates can easily approach $200, $220, $250 a night or more, which is good almost everywhere, if that makes sense. But again, military is where I would look. Here, I would also 2 miles, but I could, depending on the customer type, I could go out to 20 miles from the military base and still make that work.
Now, let me ask this, Jay, and this may be I was going to say this might be a deep question, but I don't want to overstate my question. It could be a really dumb question.
Sure.
Hear me out, okay, Jay? Hear me out.
You wish, sir.
Okay. Because I've thought about this on the short-term rental.
Mm-hmm.
I know you've done this, and I know other investors do it, where it's like, I don't buy the property. I just go lease a property from someone else, and then I short-term rental that. And and because I don't want to put all the money in to go buy the property. I just want to go lease it. Now, on the other hand, I know other people are like, well, and again, it's people with retirement accounts like, no, I want to own the real estate. I like the upside of the appreciation too, maybe. I know I'm going to have to throw some cash at it. I'm not just leasing it now and having pure cash flow as long as I can operate it right. So what, between those two models, I mean, any comments on that? Like what someone should do? Maybe it's different for different people. I don't know.
No. I'm laughing because I just got this question like 6 hours ago. But that's okay.
Yeah.
And it's funny to me because here's the thing, though. Here's the thing to understand. It's all around understanding what your end goal is, what the retirement numbers look like, what it is that you want to create, right? It's always the math that's going to answer the question. If you're looking for highest rate of return, okay, because you're trying to still collect more assets, which is the majority of people, okay? The majority of people. I slant towards rent somebody else's property because you can expand faster Okay, you can expand faster and you can create net cash flow faster than you can by buying the property. Now, this is about the time where someone is probably, you can stop typing, what about the equity in the house right now? Okay, to address that. I know that's coming. So, because here's the thing, I can build and create equity in a business faster than I can create it inside a house all the time. Let me explain. Remember what I said earlier? I said a 1-bedroom on a monthly basis is $800. So I'm just going to use this one bedroom to show you why when you're doing this, what ends up happening is you have a situation in which you can create the equity you need, if that's what you want to do, faster with this. All right, so for hypothetically speaking, let's say we're going to use $100,000, whether that's retirement account, cash, I don't really care. I'm just trying to give you the number to see what's going down here. Yeah. With this $100,000, I'm going to assume that I can get 10 1-bedrooms. That's what I'm saying. Also with this $100,000, I'm going to buy one, let's call it, that'll probably be a 3-bedroom house in some places. 1 3-bedroom house. Now, first of all, remember what I said about $800. Over here, we already have $8,000 a month. And over here, we have $2,400 a month. So I'm already winning. That's number one, okay? But here's what I really want you to see. Over this annualized period, this is 98,000. Let's just make sure I get the math right for those of you watching back or looking online. Yes, $96,000. Okay, so this is $96,000, and this is 2,400. 2,400 times 12, and this is $28,800. Now, this single-family house is sold by comparables. So let's just say, for the sake of, let's be crazy and say that equity goes up 50%. So now it's at $150,000. That sounds good, right? That's what a lot of us want to have happen. Now, here's what I'm saying, Matt. You know that, like I know, that when you do a corporate valuation, you're looking at EBITDA times a multiple. Mm-hmm. Yeah, you already know where I'm going, don't you?
Yeah.
You already done the math, and you're like, oh, wait a minute. And this is exactly what I'm talking about. This particular business model, it is on the low side, 4.2. I've seen hedge funds and people pay as much as 20, which I think is crazy, but whatever. Let's take the 4.2. Can we just say that 96? Let's just say that if all I wanted was to use the 4.2, 96 times, that's $400,000 versus $50,000 of equity. Do you see where I'm going with this?
Yeah.
And hedge funds and groups are buying pre-made short-term rentals today. This is already happening. In fact, let me go one step further. Many people say that an 8% return annualized would be great. So that means if I had $96,000 that ran on a system and that was representative of an 8% return, I could make a case to say that how many is this? Every 10 1-bedrooms is the same as $1.2 million. Tell me, is the house ever going to going to accelerate in equity that fast?
Mm-hmm. Yeah. Okay.
This is my point. The math keeps telling me what to do. So I rent them first, and then I take this cash flow, which is why this crazy thing that we're doing to try to take down 67 at once is important, because what that will create is a situation to where we have between like $250,000 to $300,000 every 90 days to put into apartment buildings and hotels.
Ownership. Yeah.
And so I use that cash flow to then to put it into ownership, because that's a taxable problem.
Well, there's
that's
there's
okay.
no cash, like that's just like, you know, credit or having a credit partner, you know, getting a leasing situation where you can create ownership on the back end. Like that's better than these no money down strategies or stuff that,
Yes.
that you read about. Like this is like a for sure deal.
And that you're saying the same thing that I say, and I'm the no money down guy. Trust me.
Yeah.
I understand it. What you're saying is that I don't need to hope to refinance later for a cash out. I don't need to hope for anything other than that humans want a roof over their head. That's what I like. I don't need anything to go right other than operations, and that's within my control.
That's short-term affordable housing too. I have actually a good friend that does that almost permanently, does short-term affordable housing with a young family, and they just pick destinations and they're moving every 3-4 months.
Yes.
And they need a 1 or 2 bedroom.
So now we're talking about, that sounds like some potentially relocation companies, but those also work. And there's a program for veterans. It's HUD, HUDVASH. That also works. There's lots of, especially now, programs for migrant farm workers as well, but there's an insane amount of construction going on. So and nearly every construction company needs this exact same type of housing because, believe it or not, there's a lot of hospital construction right now, which is kind of ironic. And so you've got a double-edged sword where they're building medical facilities. The construction crews need a place to stay. The people who are working there need a place to stay. And the people who are coming to visit the people who are in the hospital need a place to stay, which creates this conflux of demand. And there's not enough supply anywhere. There's just not enough supply anywhere.
So Jay, how do you address then the getting around the issue? Because I just got like a handful of questions that came in as we're going through this, of disclosing to the owner what your intent, what your use intent is of that property.
Yeah, why would you assume of course I'm gonna disclose. That's exact. There's no need to get around it. I'm telling them straightforward. Here's the script. Hi, my name is Jay. My company and I are looking to lease a number of properties in the area. Are you the right person to talk to about this?
That's it. Yeah.
I'm coming straight at them, telling them, hey, I am not looking to stay there. Plus, I'd like to rent your entire building.
There you go. Cool. Yep.
No
I think a lot
around.
of people are like, oh, are you getting tricky or creative and like what you're telling them, or you're not telling them? And, you know,
But yeah,
No,
you would.
I'm educating them that there's an opportunity. But here's the thing. Costco, which does wholesale, doesn't care about Target. But yet they both sell soda, they both sell shirts. Costco's not like, oh no, Target's gonna take our market. No, there's two different companies, they do two completely different things, even though I've been to both stores.
Yeah.
Right? When I'm looking for one thing, I go to Costco. When I'm, more toilet paper than I could ever consume in my entire lifetime, Costco. That's how it works. If you need a roll real quick, Target, different thing. That's how it works.
So this strategy, I think, used to be called, like, back in the day before short-term rentals were such a thing, like sandwich leasing.
Yeah.
And it's like I would go get one lease, basically, and then sublease to other people. So in your lease, let's say you're buying this with your IRA LLC, okay, or solo 401k.
When you say buy, you mean buy the property?
Sorry, leasing the property.
Thank you. Continue.
Clarification. Leasing the property. The tenant on there is the IRA LLC. It's going to pay security deposit, the first month's rent. It's going to pay to furnish it or whatever it may be, and then it's going to have individual leases that are going to be short-term in nature, effectively, to all these people, tenants that are going to use it, or you're going to Airbnb it, or wherever your short-term market is. So, but you need to have that authorization from a legal standpoint. I mean, we're talking about being upfront about what you're going to do with the property so the owner knows, but put it in the actual lease when you go get it. Yeah, and you can 100%. Do that with an IRA, just so everybody's knowing. A lot of clients are like, hey, I've only got 10 grand left in my IRA. I don't have to buy a property. Maybe this is a strategy. You might 100%. Have enough to go do a short-term rental and basically do this leasing strategy rather than the full purchase.
That was a question.
Okay. $25 per square foot. $25 per square foot is what I tell people to estimate for the budget. Over time, you'll learn to you'll learn how to get that number down. I'm being conservative with that number by telling you, I know it can be done for less. I know that, but it's not a competition to see who can spend the least, okay? I'm just saying $25 per square foot is a conservative estimate. So if you've got that inside your budget, and the reason I do it on a per square foot level is because somebody's gonna say, what about a 3-bedroom? What about a 2-bedroom? What about my vacant land? And now I'm telling you $25 per square foot, and now you know. That way you
So that's for the furnishing and everything. Is that what you're referencing?
Yeah, that's for leasing, that's for furnishing, that's for your screening, safety, security equipment, the software, websites, everything, $25 per design, photos, everything, $25 per square foot. If you're spending more than that, you did something wrong. I don't know what, but something, but you should be able to spend less than that. But if it's your first one and you get right at $25 per square foot, don't like, oh no, hang your head in shame. Just know that that's normal. And then you should learn your processes better so that you can whittle that down, which is why one of the reasons why between 0 to 7, it's harder because you don't have volume purchasing yet. Like when I go to, when I go to say Best Buy or send someone to Best Buy, we'll buy all of a certain television that they have, like all of them. They're like, what do you mean? Well, you want all 13? Well, yes. Do you have trucks? No, we have 2. Yes, we're 2 of them. We're ready.
We're wholesaling TVs.
Yeah. They're like, what are you doing? And I was like, yeah. And when you go to Costco and you got stacks of towels, and I mean stacks, the people look at you funny, but it allows us certain things from a volume standpoint that I would not be able to do otherwise.
You can do all this with your IRA or solo K too. So a lot of people are asking, like, you're not picking up a hammer and like improving the property. You're managing it, buying materials, buying the furnishing. So this is all within the boundaries of doing that. I got a ton of questions on that. Like, how do I manage this? And like, can I buy the materials? Can I buy the fridge? Like, how do I do my furnishings? Like, you can do it.
Yeah, let me ask this though, Jay, because and I just know Airbnb from being a customer, so forgive me.
Sure.
I know it might be
That's okay. I will forgive you this time.
Okay, so a lot of them seem to have management companies. I go stay there, and I'm not talking to the person that owns it. Sure. I'm always dealing with the management company, which is fine. I mean, great, but they're taking care of everything. They're communicating with any questions. Sure. They're making sure they get paid. They're making sure it's cleaned. So how many people use an actual management company for their short-term rentals versus are hacking it out themselves?
I don't know, because I ran the number.
What do you recommend then? I mean, trying to get out like what
people are asking, like, do I do it?
No, I would not recommend using a management company at all. In fact, we regularly put people out of business who are using management companies. There's a couple of reasons why. There's an inherent flaw when using a management company in this model, in a short-term model, that doesn't exist in a long-term model. The reason is that we make money on a per day basis. Efficiency matters. So what happens inside of a management company is that the management company has a labor cost. Let's just talk about cleaning for a second. They have a labor cost that they've got to manage. Here's what happens. They then, in order to scale to the appropriate size, especially as they rescale, what happens is that they cannot clean your unit fast enough. So let me put it to you this way. If you have a reservation, say Monday through Thursday, meaning Friday, Saturday is currently open. Yes, Monday through Thursday was occupied. That's wonderful, and you feel great. But what happens is that they typically will need to block Friday because that's the day they're going to clean. And your next availability is going to be on Saturday, which is currently open. What I'm saying is that same situation, when you learn to do this yourself, yes, you got that same situation, except this person leaves on Thursday, okay? That leaves on Thursday. Not only do I have Thursday evening, but I can get a reservation on Thursday, Friday, and Saturday, because in between 11 a.m. and 5 p.m. Sorry, 4 p.m. That's typically what we do. So between 11 and 4, I've mastered how to get this sucker turned around, clean, looking the spick and span like it should, which gives me 2 extra days of revenue that you couldn't get because you wanted to use the management fee. What's worse is that my cost to do this is way less than the management fee that you're paying. So one, you're paying to have lower occupancy and lower revenue because that, and that is, so it's like you're getting hit 3 times for the decision to not learn how to do this piece, which what I'm saying is can be done mostly with technology.
Now, is this why when you were talking earlier, this 1 to 7, 7 to 15, 15 or more, this scaling matters? Because what I'm hearing first, what I'm thinking a couple of things. One, I know all of us here with IRAs and thinking about doing this with our IRAs are thinking, well, I know I'm not going to do it. By the way, I'm also thinking there's no way in hell I'm going to clean it anyways myself. So I got to have a team.
That. I got stories and you do not want them. I promise you. It is gross. You have no idea.
So you'd want to get out of the business?
I almost quit the business a couple of times. First, because women, your lipstick does not belong on my sheets. Okay? I'm just saying, makeup in my sheets? No. And no matter how many times I put the makeup towel in there, why do you still use my white towel? I don't know. It is so frustrating. But we solved that issue and moved on. I almost quit over that and the cost of utilities because people, I mean, when I grew up, my mom said, don't open the refrigerator front door and leave the window open at the same time as the AC being turned on. But somehow, when you come to my place, you forget all that.
Yeah.
So, it's like,
okay. So, but what I was trying to get at is you got to have a team, right? So like,
yes,
and we need that for the IRA clients, right?
Yes.
We want to do that with our IRA or solo. Okay.
Yes.
I can't go do it. I can go make sure it's happening and hire them and pay them.
Yes.
So where do you get those people? I mean, is it who are you need? We know we need cleaning. Who else do you need as part of your team?
Your power team.
Yeah. Well, the first and most important, cleaning is by far the most important. You're going to need triple backup. You can't even have, if you have 1 unit, you should have 3 cleaners. Okay. It's just one of those things. Cleaning doesn't get to be reliable until you can promise a certain level of work, which is again a volume situation. Yeah. So if you can't give any one cleaner a certain volume of work, do not expect them to be reliable the way that you want to until you can do so. So you need to be able to hit certain benchmarks to make it work for them, which makes sense. Now, with that being said, you need your cleaners. So that's from an operation standpoint, you need the cleaners. You also need maintenance, okay? Maintenance. Then you're going to need your emergency people because you will have them. Now, sometimes there's some overlap. Some people can play both roles, but then there's what we call the on-the-ground operational assistant. So to be operational, you need those individuals. From getting the thing set up, you need what I like to call your construction crew. These are the people who are going to open all those. Man, if you don't like moving, you really don't want to do this yourself because it's like moving every time because you're buying all the dishes, your blenders, you're opening up, you're putting together all the beds, the couches, the furniture. You got to put all of that together, hang stuff on the wall. So you need a crew of people who do just that. They just set up the units.
Your staging crew.
Well, it's a little deeper than staging because the stagers aren't concerned about making sure that you have the correct amount of toilet paper and the correct amount of coffee and the correct amount of your cooking oils and making sure that you have the accurate number of towels that are folded and available as well as sheets. And then your pack and play, your straw, the high chairs. You just got a lot of moving parts is really what it comes down to.
32-point checklist.
I think it's 167 if I remember correctly. But yes, you do that. That's exactly right. So we've got SOPs for days, checklists for days at every piece in order to get it built. So that's one crew. And then to operate is another. And then you need the financial team, which is one of the most important. because a lot of your business intelligence is going to come from your financial data, especially as you expand, wondering if, do I need more 1 bedrooms? Do I need more studios? Do I need more 2 bedrooms? At what daily rates are we actually optimal at? All of this stuff becomes statistics and math. So in fact, if one of you out there is a data analyst, please hook me, reach out, because I'm looking for a good one, because I got a lot of data that we need to find some anomalies in and through that can help create really big pivotal swings when it comes to understanding what pricing needs to be, which, by the way, is the hardest thing of this entire business.
Okay, we did promise some questions for some tips on using Airbnb or other online platforms. What are any tips or things you see people do wrong, maybe on Airbnb or other places that are popular?
Photos. That everybody thinks the cell phone's good enough. It can be crooked and all kinds of things. It gets on my nerves because it's like, I can tell the professional person versus the non-professional within seconds of looking at your photos. Okay. The number one biggest problem is so many of them have a security violation. Okay, here's my point. Not to scare anybody, but guess what? There's criminals out there. And you know what they do? They scan Airbnb and look for the houses that they can identify from the photos, so that then they look, because you are telling people, oh, checkout's at 11, next person comes at 4. So they watch the pattern of people arriving and people leaving. And then when they know the house is vacant, that's an opportunity. Simple. That's just putting it simple. Let's just say they're being really obvious and really simple. So there's lots of photos on Airbnb and other marketplaces where you've got the front of the house sitting right there, plain view with address. What? No. In fact, there's an entire segment of the population that will not stay at your location, because we identified this when we started working with domestic violence shelters, because this is a form of temporary housing that's needed. And she or he has to be able to live in a place where the other spouse cannot find them, can't just by looking, right? So they need safety and security. And you cannot create that when you've got the front of the house. You're not trying to sell the house. And that's the difference, is that a lot of people use real estate photographers who are trying to sell the house. No, you're trying to sell the experience inside the house. That's what matters. So the experience inside, and that distinction, very few people get, and I can tell it in a heartbeat. Oh, they don't know what they're doing. Yeah, you hired a professional photographer, but you're showing off the outside of the building and the pool and all this other stuff, and I know exactly where it is. Any criminal can case it, and you should think about this, because your guest may not feel safe, and you don't even realize that you're putting your guest at risk. Also, divorce attorneys, also, oh, get this one, house arrest. Did you realize that the government and counties can use short-term rentals for a house? It was great, crazy to find this stuff out. What? I didn't know. I'm just like, well, that's a new one. And they come with their own security, though, so that's pretty good.
Yeah. I like it. Okay. Let's hit some
photos is the worst thing. Everybody's messing that up from the beginning, top to bottom.
Okay, that was a great tip.
Let me find something like on tax stuff that I had here that was good, just at a high level.
Well, I know there's outside, of course, the IRA, short-term rentals can be an awesome tax strategy, because you can take the short-term rental losses and offset some of your other income. So there's an awesome strategy on that. By the way, the real estate tax summit that I do with Mark, my partner, we're going to be going over some of that short-term rental benefit. But for IRAs, just remember, whether you buy the property outright and you're leasing it on the short-term rentals, or you're just leasing it and you're then subleasing essentially to short-term rentals, I mean, that's rental income. No UBIT, no UDFI in your IRA, no tax. And it's a cash flow game, like Jay said from the beginning. You're doing this to generate cash flow. Whatever money you got to put out to that investment, whether you're buying the property or you're just leasing it, you've got deposit and furnishing and that type of stuff. that investment is going to have a rate of return. And we're
Yes.
trying to cash flow and build up that retirement account, which, for those with the Roth is going to come out totally tax-free later on at retirement. So,
Or the HSA. That's my
or the
favorite.
HSA too. Yeah. Don't forget the HSA. Love that.
This is a good one from
Okay.
Jamie. So to clarify, I can hold my short-term rental property in one LLC, and my hospitality property management company can lease the property to run host via Airbnb. This maintains my real estate LLC under passive income, correct? Question mark.
I knew that was coming.
Okay. Let me jump in.
I was waiting for that. I'm surprised it didn't come up sooner.
Yeah. So let me say, and this wouldn't have to do with an IRA, by the way, everyone, because in an IRA you wouldn't do that, but we've had a number of strategies, and I don't know, Jay, we even chatted on this recently, but the short-term rental tax rules have changed a lot over the last few years, where essentially you don't need an S corp. There's not UBIT in an IRA as much, as long as you're not providing services during the stay. You can have it be short-term rental. You can even take that loss and offset ordinary income. Again, we're talking on your personal tax return side. So you can offset other income. You don't need to do this the properties in one LLC leased to your property management hospitality company from a tax standpoint. Now, you may do that from an asset protection standpoint, and that is what like a hotel would do, how Jay was talking. The hotel has an LLC that owns the hotel real estate, and it has a management company that's an LLC or corporation that's operating the business, dealing with the customers. That management company pays a fixed rate of lease back to the real estate company, and then it has its own little cash flow essentially. So you could do that. You don't have to, but that would be for asset protection. I don't know that you don't need it in terms of to maintain passive income, Jamie, though, like you're saying there. Short-term rental generally is going to be passive income, but
Sounds like she's talking about doing like an IRA LLC structure too, trying to get around that.
I wouldn't. This would make no sense with IRA LLC. You wouldn't, because you couldn't have your IRA LLC own a real estate company and then you own a property management hospitality company or something. It just, I wouldn't go down that path with an IRA. But just
And
IRA
on
LLC,
that point,
IRA LLC.
by doing that, you eliminate you're going to inadvertently eliminate a very important component of the revenue strategy when it comes to short-term rentals or a hospitality company, because and here's another mistake a lot of people are making, is they're trying to make 100% of their revenue from the accommodation rate. That's not it. That you can't do that. There's a reason Vegas gives the rooms away for free. There's a reason. Okay. So it's expose, involve, upgrade. You get them in, move them up. So, and because things like early arrival, that's a line item. I promise. Early arrival, your pet rent, it's literally really great. I love you if you travel with a pet. Thank you very much. The late departures. But let me get into more fun things. Adding tiered internet. This one is very profitable. Taking that same internet and yet being able to throttle it. The free level, you get 25 megabytes faster, or if you pay $5 a day, it goes faster.
Just like the hotels do.
100%. We can do, again, all done through technology. Then you've got your, oh my God, transportation is an understatement to say the least. Transportation, but what's really huge, especially even more so, is recovery houses. So with a recovery house, you've got a whole situation where you've got food included. Yes, in some cases, additional medical services. You're eliminating something that's hyper profitable from being able, once you do that, and you could, those additional services, you want to have access to those. That's why I say your first 12 months, the minimum is $800 per bedroom per month, because what happens is that over time, you're going to learn the demographic of the customer who's coming. And guess what? When you do, you start adding more services for that customer. Like when COVID first hit, we started doing pre-packaged food delivery because the nurses didn't have time during the day to go to the grocery store. We're giving them scrubs for stays of a certain length. We even started giving away televisions for reservations 45 days or longer because it was cheaper to give someone a 50-inch flat screen HD TV than it was to try to negotiate a discount on that same reservation. So we do all of these things in order to keep margin where it needs to be and making it go up. Right. So, and I love this one, the extended stay. So when people want to stay 30, 60, 90 days, being able to add things like HBO Max or Disney Plus, right, for a nominal fee, $5, $10 a day. Well, it may only cost me $20 for like 7 locations, but $5, $10 a day times 7 locations adds up real fast and creates a very significant profit margin. You don't want to, ooh, Lord, you got me all kinds of excited because this is huge. You make more of your money on the additional services after the customer arrives than you do from the actual accommodation rate. And most people are trying to make all their money on the accommodation rate. And that's just another area where they're losing out to the competition. This, by the way, is the number one strategy of how we put people out of business. Because if I lower my advertised accommodation rate, it's because I know I'm going to be able to sell enough of these additional services to still make my numbers. And what ends up happening is the amateurs see me advertising at $67 a night and they go, okay, I don't see how they're doing it, but it must be working. But what they don't know is that on the back end, what was $67 a night, we end up collecting around $140 to $172 a night from that reservation and still make the money we should have made all the time. But while they're thinking they have to compete on the accommodation rate, but steadily losing money, trying to figure out what we're doing.
That's great stuff. I felt like we need a part 2.
I know.
There's so like great, so much. We're like a little past the hour.
I knew that was gonna, it happens every time. Every time.
Here's the biggest question, and there's like 10 people that have asked this question at least, because we've had several hundred that have stayed on the entire time, which is amazing. What is my next step to like get started? Like, how do I get going? How can I learn more information? Like, what's your website? Jay, people are asking that too. Like, I need the checklist. How do I get my power team? Like, I just want to
get the playbook.
They need it.
They need the short-term rental playbook.
Yeah. Funny enough, we have that.
I know you do, Jay. I was setting you up. I know.
So
we wanted you to hit a home run, but you hit a single on that one.
So if you just go to cashflowdiary.com/blueprint, BLUEPRINT, blueprint, we'll send it to you for free. It's literally 8 hours of training on how to get your first one for absolutely at no cost. And it goes through the exact script of what to say to the landlord to get them to say yes, goes through lease examples. It goes through how to identify the marketplace. It goes through how to determine who it is that you want to serve, giving you some ideas around photos, how to get your photos right, and definitely how to get some of your equipment right. That is what we do to help you get your first one so that you know how to get a unit and make that happen. Okay, so that's literally nearly everything we talked about is covered in there as it relates to getting your first one at no additional cost to you. Just go to cashflowdiary.com/blueprint.
Well, everybody said we need a part 2. It was unanimous.
We'll get that link.
I'm used to it. It happens every time.
Podcast episode and also on the YouTube video and on the Direct Diary webinar page too, so people can link to that to reach out to Jay. Jay, thanks so much. Love all the knowledge on this. I knew we'd get some awesome info on short-term rentals. We just want people to let you guys know you can do it in an IRA too.
Absolutely.
Don't forget that, of course. And so we'll have another awesome webinar at Directed IRA next month. And we want one last thing you to be aware of. There's a discount code for those of you who do not have an account yet. Use the webinar 50. They'll save you $50 on opening up a new account, webinar 50. For any of you that, you've been waiting and you're like, all right, I'm doing a short-term rental now, doing it within my IRA. Webinar 50 will save you $50.
Awesome.
Okay.
All right.
Thanks, Jay. Pleasure. Thanks
No problem,
everyone for
guys.
being on.
You're welcome. Talk to you soon.
Stay calm, self-direct on.